Hello and welcome back. This is David from the Personal Finance Squad. Hey, we just finished up with section 10.3 where we saw Jasper's increased disposable income by way of not only a raise but paying off debt and nailing down his emergency fund and reducing some monthly expenses. Now he has a $1,205 plate of money to work with, and we're going to start addressing some of these other items he's going to choose to spend money on. So the first one here is 10.4, adding term life insurance to the budget. Now, this is another case where the employer is not paying out as much in the benefit because Jasper's employer also decided to charge $50 per paycheck for his health, which included the dental and the vision. So in this case, life insurance is also going to fall under that. It's not too bad though. In the past we can see that we talk about that the term life insurance was a low rate, which was $10 a month, which is a very low amount. Of course that depends on how much actual insurance coverage he was receiving, but it was a benefit that he had that he didn't have to pay for. Now that's going to change. So Jasper, being that he doesn't have this benefit, needs to decide what kind of insurance he's going to obtain. Now, we are going to go through life insurance from a full perspective in other videos. In this particular case, Jasper's going to go and opt for term life insurance, which is probably the most common and the easiest by far to get and understand. So just so you know, we can go through a piece of information or two in here that life insurance offers protection for a preset term of 1 year or more. Typically, policies can go 5, 10, 20 years. I myself have a 20-year policy, and that means that that amount that I pay does not change for the entire 20 years that I keep paying that premium on a monthly basis. Some policies will allow you to pay higher amounts, meaning 6 months or a year. Technically, you could pay your whole policy term out if you wanted to. That's up to you, but typically they'll mark them out for a monthly amount. And so like I was saying here before, it provides the most bang for the buck and simplicity in terms of the insurance that is out there. So you can see that the policy terms are sold, like I mentioned, 5, 10, or 20. That's the most common. And the monthly premium will remain fixed. Right? For example, let's look at a policy here. We see that a $500,000 policy for 20 years would be $38 a month. And just note, if you think about it, insurance rates have dropped over the years because people are simply living longer. Term insurance policies build no cash value. However, there are cash value policies, but we will discuss those at another point. The term insurance policy is designed for when a death occurs. And that money goes to a beneficiary, and that is the person who will receive the money. And they collect the face amount, which is called the death benefit, which in this case would be this $500,000. And this $500,000 is tax-free. There are not many vehicles out there today that provide that, but unfortunately it comes at a cost. And not the cost for the premium, but the cost of someone having to pass away. It's important to note here that although it's written here that at the end of the policy period that the rates will increase, and what we're saying here is that you need to furnish evidence of insurability to renew to qualify for rates. What it's saying here is two things. They want to know history, which we'll get into in a second, but generally speaking, the older you are, and if you have a 20-year policy, let's say Jasper's 48 when he's done, it's going to cost him more for a policy on a monthly basis. So let's do a quick recap. So we said, for example, that our man here, that he wanted a $500,000 policy. And you would say when you're speaking to somebody, you can go into like life quote or select quote, something like that. You do that like on the internet, which we'll get into in other videos. You'll have many people calling you for business. But if you were to say or input into a calculator online like an input form, you're saying that I want a $500,000 policy, which is the death benefit, but we do not say death benefit, for 20 years in this case. And then you will pay a monthly premium, and you will name a beneficiary and they receive that death benefit. Some other things they may do, and this depends on the company that you're dealing with that you ultimately choose, is that they're going to get a health questionnaire out to you, and they will also ask things like medications that you take. They will ask you drink or smoke. They will ask about family history, and there's a good chance they could take a blood test. These are the type of things that may go on. It's pretty standard, and you have to have a life insurance policy based, again, if it's what you need in your budget. If you're a student right now, you're not really thinking about that. If you're an adult in the working world and you have family members, such as a son or a spouse, you may want to do that. Typically, you have a life insurance policy for your family, your immediate family, but you can do whatever you want. Someone like Jasper, he's 28 and he has a child, so he wants to make sure that he's taken care of. If he didn't have a child, he might not get the policy at this time. So again, those are things to think about, but these are the types of things that you increase into a budget as you can afford them, especially as more responsibilities occur in your life. Okay, so that is going to conclude this section, and we will get into pet insurance, whether it's a good idea or not, as Jasper continues to choose to purchase more things or services for his increased disposable income. Okay, thanks for joining, and we will see you in the next video.